All right, guys. Goodness, I just recorded 15 minutes rant and it was epic. Yeah, just have to take my word for it, but I did not record it. The mic was off this whole time. Oh man. But anyway, let me try to record it again. Of course, it's pretty late already for me. I need to go to work tomorrow, so I'm gonna try to make this quick as possible. So this is gonna just be, hey, GME type of balance sheets video again. And, this is kind of in response to a couple days ago, I think last week or something. Bigum was posting, or it might have been 3 days ago actually, posting a snippets of articles stating that, hey, within these 10 quarters, GME has not made much money at all. um, they only were profitable one quarter out of that 10 quarters. And that within that 10 quarter, GME was managed to lose $866 million of money, right? Now, he might get a point there, but let me show you why they are in that particular spot in the first place. And it's not because they're not making sales, they do make sales. It's just the circumstances of what it's called goodwill and asset impairment. Okay. Now, a goodwill in a nutshell, I might be wrong here. Again, I'm not a financial advisor. You could look it up for yourself. It just means a valuation that is being put on a company. And when the valuation is lower, and when the asset of the company is lower than that valuation, that is when you get in trouble, and that's what you have to pay. It's called impairment, meaning that it's going to hit you on the balance sheets that you have. So your asset is lower than the actual value of your company. See what I mean? So um, now I don't remember what the goodwill value for GME was, but they had to pay back in 2018. They have to pay $1 billion, close to $1 billion. You see, in goodwill value, $1 billion. But guess what? They had a net sale of 8.2 billion, and then cost of sale about $6 billion right there, which make them gross profit. Okay. Now, with that impairment that they have to pay, they had to show a loss of 600 something $1 million. You see what I mean? And so without this, they would have been shown profitable, and in which case the stock would have been fine, or not fine, but at least not as bad. Uh, right? The balance would not be as bad as it looks right here, right? And then, of course, coming back to 2019, it went down, right? Meaning it's indicative of the asset being higher than the year previously, but it's still not high enough to not pay the impairment here. Now that's for uh, around $400 million, right? Now this is within the year, so 10 quarters. That means the amount of a goodwill is including in this one. So let's say instead of 2 years and a half, because Bigum, sorry, Bigum was saying that 10 quarters is about 2.5 years. Okay, so it would have been half a year of this, and then moving on to 2000, 2020, and then 2021, right? Okay, so according to Bigum, of course, we lost $800 million. My point is that because of goodwill value over here, that takes a whole chunk of that $800 million, quote unquote, loss there, right? And all you have to do is just look at the goodwill value, right? It began to decrease over time. And that's what you want to see. Now, let me show you a most recent one right here. So you still got the 2019 there, right? And then you could see that the goodwill value become better and better as time goes on, right? Now, curious to see what goodwill value for 2022 is. I think we have it up here, no? I mean, asset liability. So asset. Oops, sorry, let me go quick. So this one is 2022. If you look at this right here, look at this. So last year, shareholder equity. This is important as like this is the most important line. I feel like it's so underrated when people are putting out balance sheet. They look at the revenue and all that stuff. Yeah, those are great. But this is the bottom line that you need to look at. Is the shareholder equity. That means you and I who hold the common stock share is going to increase in value if you see this. So, what are you seeing? You are seeing a $1.2 billion increase in value for shareholder. Yeah, this year alone. Okay? Let me say that again. $1.2 billion. Now, that might not be much for you. Like if you divide that by 300 million shares, that's not by much. But the fact is that you have increase over time. Now imagine if it increased more and more and more. That is what you want to look for. Okay. Now if you look at the previous one, it's not as good, right? But you have to look at it as like they're spending money to make more money. So last year it went down by close to $200 million. So they spent $200 million of share equity to make $1.2 billion in equity increase. Do you not see what I'm seeing? Right? So this is important. So please look into it yourself. And then I think one of the things that I want to point out before I go, I think it's interest payment. I think interest. Okay, sorry, bear with me 1 second. Oop. Okay, hold on. Right here. Okay. Wait, I want to see the one that has 3 years. Right there. So if you look at the interest expense net, you could see that there is a, let me copy that real quick. You could see the trend here, right? So it used to be $27 million in interest payment. Now it's down to close to 27 million dollars. So I mean it's still close, right? It went up here, of course. But let's look at the other one here. Right there. Okay, let's go down. Oh, here we go. So this is from the year 2020. 18, look at that. 2018. From $50 million to $27 million. And then, 32 and then 26.9. You see what I mean? So the trend is down. The fact that their interest expenses is down, that's good. That's a good thing, meaning that they are paying off. That's yes, they still have some debt. It's not like there's zero debt, but I think it's manageable here, right? And if you look at the asset too, asset versus liability, asset base. Oh, that's too much asset word here to try to find that one. Okay, bear with me right here. So this is 2021, okay? 2021 current asset. Maybe that's the one that I should copy and paste. But if you look at real quick, they have asset liability, right? So that is 2021. Let's look at 2022 right here, okay? And if you look at it, they were able to decrease their liability by so much, increase their asset by so much. You see what I mean? And this is why your shareholder equity, meaning the value of your share, will be more for this company. And you still not getting this? But anyway, so I digress. It's been too long already. So please look into it for yourself. Again, I'm going to link this down below, and please do your own research. All right, bye.